understanding what's happening in the stock market is, for a lot of people, it's fun. For other people, they hate it. And for retirees, what I've found with retirees is that they seem to focus on it even more than they did when they were working. And that's because for many retirees, your monthly income, your financial stability, and everything is driven in large part by what's happening in the market and how your portfolio is invested. There's this thing that happens for retirees where you go from saving money throughout your career, and then all of a sudden you're left with this pot of money and retirement accounts and different types of investment accounts, and you have to somehow take that pot of money and turn it into a retirement income stream that's going to, provide the type of lifestyle that you want, and it's going to last as long as you do. And also, you're going to be able to have cost of living adjustments over time and to be able to keep up with inflation and these sort of things. So for this reason, we have to look at kind of what's happening in the market. Not that we want to look at it every day or even every quarter, but here we go. A little bit of a quarterly update. I happen to find investing very interesting, and it's always, I think there's some value to have a sense of what's happening in the market here in the U.S. and internationally, so you have a good sense of maybe some reasonable expectations for your portfolio. For the second quarter of 2024, here's the very simple Cliff Note version. Most stuff went up, and you made money if you were invested. Now, let's look at some charts and do a little bit of a breakdown, because depending on how you were invested, it's going to impact what your performance actually looked like. So let's jump into some charts, and the ones that I'm going to look at today are provided by Y Charts. Thank you very much. They have great stuff. Great information to get a good, clear, accurate picture of what's happening. So let's go ahead and dive in. So for the second quarter of 2024, here we're looking at the major indices. And if this is kind of maybe new terminology for you, really what this is, really what we're looking at is on this top chart, this little line graph here, and then this table over here. This is showing the performance of three major U.S. Stock market indices. So the Dow Jones, you have the S&P 500, and then you have the NASDAQ composite. And these are different benchmarks to kind of get a sense of, how the economy is doing. Well, it's one way to do it. So the Dow Jones is, it has less tech companies in it, more kind of your older industries, industrials, and consumer staples and that sort of thing. The S&P 500, I would say, in my opinion, this is probably the most representative of the U.S. stock market. It has covers all the different sectors of the stock market, and then you have the NASDAQ, which is focused mostly on technology companies. So looking back over the last quarter, performance is kind of interesting. So the NASDAQ tech stocks, doing really good, up over 8%. The S&P 500 in this last quarter up over 4%. And then Dow Jones, pretty interesting, negative 1.27%. Now below, we're looking at international markets. Here we go. If we look at the major indices here, emerging markets, when it comes to investing, the term emerging markets, think of like the third world. Well, no, that's not totally true, because with emerging markets, you have countries like China, the Philippines, India, Mexico, and I guess some of these you might consider third world countries, but they are emerging. They're going from kind of more third world countries to having a growing middle class and more advanced industries and economies and that sort of thing. And then the MSCI right here, what this essentially measures are countries that are more developed, so like Western Europe and Australia, Canada, Japan, and this right here, total return, this includes with the United States, and now that's without the United States. So you can see that international compared to the United States. Interesting that emerging markets actually had higher performance compared to the S&P 500 in this last quarter. I don't think that most people would have expected that. Now on this table, we're looking at the periodic table of investment performance. So each of these colors represents a different investment category. So we're looking at, we've got different sectors of the U.S. stock market, and then also looking internationally. We're looking at bonds, we're looking at real estate, looking at commodities. And so first thing to do here is I want to look at year-to-date performance, and we looked at the performance for the last quarter and saw that, the NASDAQ was the best performing index this last quarter. And year to date, that's also the case, up over 20% for the year S&P 500 up about 15%, commodities up 11, and then we go down the list, right? Emerging markets, and let's just go all the way to the bottom here. U.S. commercial real estate still struggling. If we're looking at it from a year-to-date perspective, so it's always interesting. When it comes to investing, there's a lot of different things out there, a lot of different types of investments that you can access, and so, but I've made some videos about this, but basically, for the last 10 years, the champion, although there's been some short periods where other markets have done better, basically investing in big US tech companies has been what's worked the best over the last 10 years. Will that always be the case? I guess we'll find out, but nonetheless, kind of interesting to look at. The last chart that I wanted to look at is a breakdown of US sector performance for the stock market. So this is looking at just the second quarter of 2024, and this gives us maybe a more granular look at what parts of the stock market have done well relative to others. I think this is really helpful. Maybe it's just simply as a takeaway as an investor. I'm trying to think of, how is this relevant, or, why does it matter to look at this? Frankly, most of the time, looking at your investments a lot is not a good idea. That's what the research shows for sure. But one thing that I think is probably important is that when you're looking at the news, you mostly just hear about the big tech companies, but there's a lot more than that happening. There's a lot more than that you can invest in as a U.S. investor. And so it's good to see what other parts of the stock market are doing. And then also it's important to note that there's a bit of an ebb and flow. So sometimes a particular sector will be doing really well, and then it'll go through a season where it's not doing as well. And so there's a lot of value in diversifying across sectors and not just being so heavily focused in one sector. Of course, yeah, except for the fact that, for the last 15 years, like I've said in a few videos, that investing in big US tech companies has basically been the best investment that somebody could have done. But here's my disclaimer that past performance is not an indication of future performance. And so anyway, take that for what it's worth. Looking at the last quarter, again, the best sector was big US tech companies. Up over 8%, almost 9% for the quarter, which is really incredible. Looking at the sectors that ones that struggle the most, if we come down here looking at financials, materials, real estate, all of these sectors really struggling. The energy sector, as well as industrials here, also negative returns, posting negative returns for the quarter. So anyway, like I said, if you are investing in retirement, your financial stability, your income, and all sorts of things are dependent on your investments working for you. So simple things to remember: staying invested, staying diversified, and investing for the long term. So hopefully this has been helpful for you. And until next time, catch you later.